What's up? Welcome to the first video that I've uploaded in a while, and it's going to be the first of many. I'm going to start being very consistent with the YouTube uploads, because I'm extremely confident in my ability to trade now. Yeah, I'm very consistent. I'm funded. I trade my own live funds, and I just thought it's time to teach some of you guys teach some of you guys for free on this YouTube. Now I will be opening a Discord soon, so look out for details on that, but I'm going to be uploading pretty much every day here on the YouTube. So yeah, and I'm going to be starting off by teaching the most important thing that you need to know about trading, and that is liquidity. Now, if you don't know what liquidity is, all it is where the buy stops and the sell stops are resting in the market. So you might be wondering, what do I mean by that? So if we look right here, we have buy side and sell side. There are different types of liquidity. Let me just explain that quickly. So you have swing highs and swing lows. You have lower resistance liquidity run, which is like trend line liquidity in a way. So let's mark that trend line liquidity. Oh my god, I can't type. And then you have equal highs and equal lows. Equal highs and equal lows. Then when you get a bit more into it, you can start adding different types of liquidity, like time liquidity. So aiming for the 9:30 a.m. liquidity, aiming for London liquidity. But right now we're just going to focus on these three main ones. So if we look down here, what we have is actually two types of liquidity that I can clearly see. Now that is the swing high and swing low ones, which I've marked out already. So we have a swing high right here, which would be our buy side liquidity. Now all that means is just where I think that stop losses are going to be in the market. So for example, lots of stop losses are going to be resting right here, because this is the most recent swing high and it's quite a noticeable one. So if somebody's bias is short and they enter into a position here, their stop loss, there's a high chance that their stop loss is going to be at the swing high, and vice versa. If people are long here, then what are they going to do? They're going to put their stop loss at these different points, just because they're swing lows, and it's just nice to look at. People that trade retail most likely have their stop losses there. So how do you identify these liquidities? So as you can see, if we just delete everything off the chart, you open up your chart and you're looking at something like this. Now you might be wondering, how do I identify the different types of liquidity? Now, if I was going to look at the chart, the first thing I would do is label the different where liquidity is. So there is a clearly buy side liquidity here. Liquidity. I'm just going to copy the word liquidity. So there's clearly buy side liquidity there, because this is a swing high. I hope you understand what I mean. So we have this clear swing high here. If we look to the left, there is also buy side liquidity here, as you can see, but we're not focused on that right now. If we're just looking at this price action here, this box I'm highlighting, this is the most prominent liquidity. Now it's also liquidity because price has not came to this point and broke it. Let's say if the price plays out, so let's play the price out, and boom, prices took this liquidity. So now this is no longer liquidity. This has already been taken. So yeah, so this has already been taken. as you can see, we have taken all the buy side liquidity. Now, if your bias is bearish, let's say I am today, this price action is for today. So let's say today my price action was bearish and we've just took buy side liquidity. What I could be looking for now is sell side liquidity, because I know that prices took buy side liquidity already. So now I'm trying to find a new draw. So the reason why liquidity is so important is because it shows us where the price wants to go. So price is taking buy side liquidity now. If price is not bullish and it is bearish, then it is going to target the next liquidity pool to the downside, which would be right here. So this is our next noticeable sell side liquidity. So if you get good and you master liquidity, then you will make a lot of money in these markets, because sell side liquidity and buy side liquidity is just where price wants to go. Price is not going to keep going up if there is no liquidity to be taken there. Most likely, obviously it can, but if there is lots of liquidity to the downside, then what is price most likely going to do? Price is most likely going to target that strong liquidity pools, especially if there are equal lows or equal highs. So also, if we look at this price action, as well as these swing lows that we have that I'm highlighting for you, that is liquidity, we also have the lower resistance liquidity run. So what I mean by that is, as a retail trader, a retail trader will be looking at this price action and thinking, oh, this is a trend line. Once price comes into this area here, it bounces off and goes up. Once price comes into this area here, it bounces off and goes up. So what is a retail trader thinking that doesn't trade ICT? They're thinking, oh, when price comes back down, taps this point, price is just going to go up. Which obviously we as ICT traders know that is bullshit. So what that basically means is that there are short long position stop losses resting here. So people that went long here, their stop losses will be at this trend line. People that went long here, their stop losses will be around this trend line. And same, you get what I mean. It's just where stop losses are laying in the market. So it's most likely where price action wants to draw to. So if we carry on price action, what it does is it takes that liquidity. Now, it takes that liquidity. Now, I don't want to go too advanced into it yet. I just want to explain the different types of liquidity there are. So this is the lower resistance liquidity run, and then obviously these are the different sell side liquidities. So these are just the different swing low liquidities where price will want to target. So let's say if I entered into a short position, sell side. So let's say I entered into a short position somewhere here. Where would my target be? My target would be these sell side liquidities. So it could be there, it could be there, just depending on my risk. But sell side liquidity and buy side liquidity is the best places you want to put your take profits once you're in a trade. Okay, now moving on to my favorite, and which I think is the strongest type of liquidity, which is equal highs and equal lows. Now all that means is where price has came to a specific price once, tapped that price multiple times but not broke it. So for example, there are equal lows here. As you can see, price comes to this point in the market and then rejects it, leaving two different candles both left at that same point in the market. So that is called equal lows. Now it is extremely good draw to find where the price is going to go. So for example, we have these, I know this is replay mode and in hindsight, but if you guys are tape reading yourself in live time, and if you see equal highs, equal lows, make sure you mark them, because it is a very good draw on the liquidity. So as you can see, we also have some equal highs here. Now, price may not always come and take certain equal lows and equal highs, but what am I typing here? Equal highs. Now, I'm not sure if price actually does come into these equal highs up here. But yeah, let's just play at this price action. As we can see, price comes to these equal lows, and overall, if we just keep playing that price action, there we go, it takes out these equal highs as well. And now we just have these equal lows left down here, and there you go. All I'm trying to show you here is just how price likes to draw to equal lows and equal highs in the market. They are very easy to identify. There is also one other type of liquidity which is very useful, and that is relative equal lows, which is near enough the same as equal lows, but it's just when price comes very close to tapping a certain liquidity pool but just quite doesn't tap it and creates relative equal lows. So here, as you can see, these aren't equal lows, but they are extremely close to each other, and price comes down and takes them. Now, in a video to come, I'll be showing you guys how you can use liquidity with displacement, with fair value gaps as a targets of price action, and how to exit using liquidity. So yeah, I hope this has been a very good video helping you, just introducing you to the different types of liquidity.